Good afternoon, Quasar Markets Live. We got Michael Litt with me, my friend for many years, global strategic advisor. To the superstars in the markets. Look, Michael, we just heard from the Fed again this afternoon. I feel like I call them the Hollywood Fed because they can't help themselves. They got to be on TV and they got to talk all day long, every day. And we have a new president elect, so who can't help himself either. So talk to me, Michael, about what's going on. What are they trying to tell us about the future?
Well, I think that the Fed is trying to tell you not much has changed, and the politicians are telling you that everything is going to change.
Interesting. And we're hearing lots of talk out of the Trump administration, and it really is becoming the most Hollywood version of secretaries. The Fox News is pretty much prevalent in here. Are we going to see over the next 3 to 6 months a lot of talk where there's going to be lots of gyrations in the markets? We've already seen the bond market crippled. We've already started to see the stock market see some signs of pullback. What is it that you want to see in the markets, and what do you want to see from them going forward?
I don't think the markets care what I want to see.
Okay.
They never have and they never will. Let me put that down as prediction number one. Um, Observation number two would be that the pivot from the mega caps to the small and mid caps is underway, Stephen.
Yeah.
The 10 pounds of mega cap that was going to get shoved into a 5 pound mid cap and small cap bag is happening. And you've seen it in the marketplace. It's getting, at first it was like 1 or 2 days a week, and now it's like 3 days a week,
Mm,
right? If you notice
right.
that outperformance and that momentum that the small and mid caps are building, and that the mega caps are losing. Doesn't make them bad companies, um, but great businesses can trade at multiples that don't make them great investments.
Right, and we talked about that this morning. This market is way overvalued when you look at those numbers, price to equity, sharp ratios. We really are getting out of whack. Talk to me a little bit about this bubble. Then, are the Fed actually ignoring this bubble in the market? Because you saw it again. They said, "Well, hey, it's all about whether or not the markets are looking forward." We're now seeing spot gold at 26.25. The Dixie's at 107. Higher dollar here. Crude oil below $70 a barrel, and of course the 10-year now sitting at 4.316. Those numbers don't pretend to me that we have a wonderful market or a wonderful economy. Am I right or wrong?
Oh, the economy, as I said, was reaccelerating last time we talked. People were talking about the economy slowing, and I told you I thought it was reaccelerating,
Hmm.
and it did. Um, there's nothing wrong with the economy fundamentally. I would say that as far as the overvaluation in the market, it's a lot of that is due to indexation and more money being poured into the mega cap stocks because of their weighting in the index, right?
So are you saying that these retail?
Got hurt so badly that they really can't influence the valuation of the 493 mid cap, small cap until money start flowing into those securities from the mega caps. The momentum that indexation creates for the mega cap stocks is driven overvaluation of a few securities. Okay, so
Okay.
people look at the S&P 500 multiple influenced by their 25 or 26 or 27% weight and say the market's overvalued. Well, mid and small cap stocks actually have a very low equity risk premium relative to their historical valuations. Or so you're looking at the wrong measure, and it is the rise of indexation, the dominance of indexation. In fact, this indexation has a lot to do with why private equity has had a dearth of exits.
Mm,
Because you don't IPO into an index, meaning all the money in indexes isn't available to an IPO.
Right.
It's only available to active managers who have underperformed the mega cap index because of the momentum flows. And so they're gun shy. They are gun shy because they got burned on SPACs, the entire structure of SPACs. And
Yeah.
so they're not participating in the IPO market. So valuations in the IPO market aren't supporting exits for private equity. This is all very much connected, but it's not because the economy is weak or the markets, all the stocks in these are overvalued. Does that make sense?
It does, and you really look at it from the perspective of the retail traders and even some institutional, they are buying the ETFs. They're not buying individual stocks. And I think you're seeing that. Yeah.
Um, yep, I think they all, and I wonder about this because I don't know the answer. Do you return to a long period in which stock pickers actually have a really good opportunity? Or are so many, quote, active managers, benchmark huggers, that they really aren't picking stocks? And you need to go with managers who are more concentrated, doing their due diligence, picking stocks. I think if you find those types of managers, if you're a wealth advisor, that's the type of manager you want to be looking for. And
Hmm.
Stephen, I will tell you, I had lunch with people at Russell Reynolds and Company. And
Hmm.
one of the things that's happening is there's a brain drain out of public companies into the private markets, private equity company.
Yeah.
Really good management people can get hired away because they can get a larger equity stake. That's why private equity is probably going to continue to have a 200 basis point outperformance to the publicly traded stock market. And those private companies that aren't coming public are going to stay in the private markets as secondaries, what they call secondaries, are really continuations, meaning longer duration as private equity companies in secondary funds. Those are available as semi-liquid for wealth channel investors as investments. And that's where some of the outperformance and excess return are going to be found in that market. Because based on the recruiting information I saw, some of the best talent, the public market companies can't compete for that talent, Stephen. They're moving into the private equity world where they can get a larger equity stake in companies that they're running and impacting. Does that make sense?
Yeah, I mean, you're right. Why buy Microsoft stock when you can buy a smaller mid cap, maybe not even an IPO, maybe just a private equity company, and you'll get better returns in that market. So I can totally see that. But where are they getting the cash for that? Is this the cash that from the sales of their stock and sales of their trading, or are they just holding cash like Warren Buffett?
I mean, who is getting cash? I'm sorry, I don't know who's getting the
Yeah, I
cash.
mean, when you're asking from the private equity side, how are they getting this money in order to make these acquisitions? You're talking about it from the perspective of buying these small companies. They still have to have money to do that, right? They still, and these companies that are bringing these people on are needing cash to be able to bring the people on, and they need to have equity in these stakes in these companies. So where is that coming from?
The answer is that the private equity has about $1 trillion of dry capital. So
Woo.
yes, like
Okay.
Warren Buffett, they have a lot of dry capital right now, Stephen. It's at an all-time high.
Yes.
They've also been able to return about 75%. I think their return of capital was 3% of their holdings last year versus 12% previously. So they're down 75% because they don't own mega cap stocks. They own what is equivalent to the mid cap 400, S&P 600. Those markets valuations have not justified going public, nor, as I said, because of the bad experience from 2021 onward, active managers aren't being aggressive in participating or valuing IPOs. So the money isn't getting recycled back to the LPs, but there is $1 trillion of dry equity powder, and the private credit markets And now even the banks, coming back from Silicon Valley Bank, are open for syndicated loans. So there's, and businesses have good revenue growth and cash flows. So there is access to debt and there is equity dry powder for acquisitions. That having been said, the exit markets are not as lively. The move up in the S&P 500 and in the mid cap and small cap will eventually open those markets up. But I think you're going to see more private equity market companies remaining private, not going public or being bought out in an M&A activity. And investors, wealth channel investors, are going to be able to access those through evergreen funds that will be traded and will be able to get into primary private equity and secondary private equity. That's where some alpha is moving with these talented management teams. I'm not saying there's still not a lot of liquidity, a lot of corporate value in the public markets, but I'm saying some of it is moving into the private equity market, Steve.
And is there a certain sector that they're looking for more than another one?
Well, certainly technology, telecommunications, financial services as opposed to bank balance sheets, right?
Right.
Payor models, um, things like a Venmo or or
Mm.
Zelle, things of that nature. Uh, those financials, people are still skeptical on energy. Policy point. Drill baby drill is exactly the wrong thing to do. What the country needs is distribution. It needs additional pipelines to get product to market. The CEOs in the energy industry have been clear on this. And we need transmission infrastructure for electricity. Those are domestic businesses. Investing in electrical transmission grid upgrade, new power generation using natural gas, which is clean, LNG facilities, and pipelines to bring more oil to Patoka, Illinois, which gets closer to the East Coast markets. That would help the oil industry more than drilling 2 million additional barrels a day. So that would actually just destroy capital.
Right.
Let's
And
be clear.
we talked about that this morning. Howard and I did about LNG and how the export of it, and we know the country has quite a bit of energy. We just we don't need to drill anymore. We just need to open up some of those Exxon Mobil, Phillips 66, so those holes they've already drilled, and start pumping some of that and cleaning up some of the pipelines. I 100% agree with you on that.
Transportation, ports, facilities, and electrical grid upgrade. That should be the energy policy. And those are all domestic businesses, very productive for the economy. And they're, the energy industry executives will probably sit with Trump and back he and Scott Bessent off of the drill baby drill, his 333 policy,
Yeah.
at least the one leg of the 333 policy, and shift it to these this infrastructure, U.S. infrastructure bill that we've just touched on. That's fantastic for the economy. Fantastic. It gets us back to doing something smart like building the Eisenhower interstate system, which is a gift that keeps on giving.
Right. And what about those people who talk about nuclear energy too, as well? We've started to see a lot of nuclear power plants restarted, even 3 Mile Island, believe it or not.
Yeah, it's interesting, and I'm going to give you a heads up on something out there. In the future, it's not investable today, but there is a joint venture between uh, three universities, one in California, one in Massachusetts, and one in Japan. They've they're working with Los Alamos, Sandia, and Lawrence Livermore. They've made breakthroughs on fusion. We could have a commercial fusion reactors in this country by 2040, early 2040s. It's moved from a science experiment to a commercially potential technology. But in the interim, I do think natural gas is the transition fuel. You could start up a few of these nuclear reactor facilities, restart them rather than take them out of mothball. And they're clean, and the one at 3 Mile Island, for instance, was not the reactor that had the safety failure,
Sure.
right? It was one that was just shut
Part of the
down.
whole
And
system. Yeah.
restarting it comes at a fraction of the cost. It produces a lot of clean power. So I think that's a positive. I think it's a good thing. I do think that in volume, our transition fuel for the next 25 years remains natural gas. We need transmission. It is the trend. And anybody who knows anything about energy and electricity production will tell you that. We just need to line the policy up. I think Trump, one of the things he could leave as a legacy is to get that going so it has momentum that is not derailed. Don't get lost on this drill baby drill thing as a
Right.
political slogan. Focus on the actual need the country has in terms of clean, sustainable energy. I mean, you've got a fuel we've got too much of, and it happens to be 93% cleaner than what you're replacing. So, and it's economic.
And one of the things that we do when you talk about this is exportation of
Yeah.
energy in this case. Canada, Mexico, and we're looking at 25% tariffs on these products coming across the border. Trump is proposing this. Thoughts?
Make America inflationary again. Maya.
Really? So you
Yeah,
don't think we
that's
have
it.
enough
That's what I've come
inflation?
up with. Make America
You don't think
inflation.
there's enough inflation as it is in the country?
There's inflationary expectations are anchored at 2.6 and 2.8% right now.
Even though the Fed says 2% is where their number is?
They'll always say 2% is where their numbers. It helps them keep the long-term inflation. We never had 2% for all those years. We had 2.5, 2.3, 2.4. We rarely dropped below 2%. There were a couple of years we dropped to 1.8. You look back at the reality, they'll talk 2%, but if the inflation is below 3%, if inflation expectations are anchored below 3%, financial assets will do very well, Stephen. It's
Okay.
above 3%. A Maya program of creating inflation could put that at risk. Yes, 25% tariffs on our NAFTA trade partners for nothing that having to do with trade. Because remember, it's about borders, the border that he wants to put the tariff on, right? Which is, I don't know what you call it. It's not normal.
No.
Trade is usually trade negotiators, put tariffs on with respect to trade issues, right?
And
Now,
not blanket ones, right? Usually they're very hand-picked. They make decisions on certain products. Maybe they're dumping steel or whatever. But blanket tariffs, to me, have never worked in the history of this country.
which aren't based on trade issues. Now, where there is there's a caveat is war
Hmm.
or an invasion like Russia.
Right.
Then you've put or Iranian sort of state-sponsored terrorism. Okay, this is I don't know. I guess this is a policy creep where I look. I don't know how much of this rhetoric um, is just a tale of the election process, and how much of it is real. Mexico is our largest trading partner. It's larger than China,
Yeah.
and that's a good thing. Okay, it's been viewed as a good thing. Deal with the border issue, which was a failure of the Biden administration. It's a
Yeah.
situation that does need to be rectified. Mexico needs to be part of the solution. I'm not sure a 25% tariff is how you solve the problem. Maybe, like Teddy Roosevelt, he's using it as a threat to get them to take it seriously and do something about the border issue. Perhaps that's what it is. And perhaps the market's going to have to live through that type of diplomacy,
Mhm.
right?
The
Um,
the heavy-handedness of a president-elect to a newly elected president of Mexico,
right.
Scheinbaum already
Our
sent
largest
a
trade partner, our
yes,
largest trade partner, right?
yeah,
So, look, I I think that like, somebody said to me, as a global investment strategist, how do you deal with Trump? And I said, well, first of all, I don't deal with Trump. I observe, and live within whatever the policies are of what, whatever leadership is. And um, the things he's proposed. There's always something big around an election. Somebody's going to propose something, and it seems like it's going to have a big impact, right? Um, I, I think you can't. The one thing I said to this is a large global asset allocator. I mean, somebody who manages, close to $600 billion, right? I said you cannot avert your eyes to Trump and policy.
yeah.
Part of the country feels that we're moving into a free markets nirvana, and part of the country thinks we're going into a policy dumpster fire, right? I think you really do need to focus on each. Like for instance, I listened to a 45-minute interview with Scott Bessent the other day, which was before he was nominated. I wanted to see what I knew him a little bit from the hedge fund world. I wanted to see what his thought process was. I think you cannot. What the advice I gave this large asset allocator, global asset allocator was, you cannot avert your eyes from Trump and policy decisions. You have to focus on it. It's neither going to be this free markets nirvana, nor is it going to be a complete policy dumpster fire. But it might seem like both at the same time. And you really are going to have to parse through what the actual policies are. At one point, Scott Bessent had been suggesting a shadow um, Fed chairman that they pick and say they will replace him so that he can thwart what Paul is doing. Now, cooler heads shot that trial balloon down, Stephen, right? But you do
Yes,
have
but as
these things
Secretary of
out there
Treasury,
that you
he
have to pay attention to. You need to pay attention to these things.
yeah, but as Secretary of Treasury, he'll have a lot of sway.
Yes. The
Yeah,
Secretary of Treasury has a lot of influence. He is not the trade negotiator, but he has influence on trade.
yeah,
And in this administration, your read through might be that he would have more. They would override the trade negotiators. They have a tendency to potentially override the trade negotiators more so than in other administrations, if that makes sense.
yeah. And one last question. I think we'll wrap it up with this. But when you're looking at the dollar, the Dixie now here at 107.08, looks like Trump wants a strong dollar. In previous administrations, has that been the best policy, or are we looking for somewhere to average out a little bit here? Because it looks like the yen is really weak right now. Foreign currencies are weak against us right now. And that should also add to some of this tension.
Mm. You know, I think that presidents talk about a dollar policy, right? And
Yeah.
at the margin, they can have some influence on the dollar. And certainly since the election, some of what you've been hearing from the um, future leadership of the United States has had an influence on markets, as you noted earlier in this discussion. Ultimately, I think the demand for dollars and dollar strength is not dictated by the White House. It's
Hmm.
influenced by its policies, but it's not dictated by it. A strong dollar is always a good thing for any country. I
Yeah.
mean, a strong currency unit.
Strong currency. Yeah.
A strong currency unit is a good thing for any country. Some guys sometimes on terms of trade, countries don't like a, a currency to be too strong, right? Um, but a weak currency is a much worse thing because of its inflationary impact and its inability. The companies, the cost, their input costs go up, right? The costs for consumers of things go up. This is why tariffs would cause things to go up. It would weaken trade. It would weaken the demand for dollars, actually. Ultimately, tariffs would be negative for the dollar, not positive. Um,
Right.
Tariffs are something it's protectionism. Protectionism is not good for a country like the US, whose corporate reach is, Caterpillar does a huge amount of business in Asia. Apple, like everybody, all these companies, right? Turning the world into a protectionist policy response. I mean, we are a loser in that game. We are a loser. We're a winner. Now, free trade and fair trade policies, where I agree is that China has not had totally fair trade policies.
Agreed.
Try to be strong and deal with that, right? In a firm manner, I think was probably one of the better things Trump did in Trump won, right? Um,
Yep.
so strong dollar is good for the U.S. economy. Free trade is good for the U.S. economy, good for the U.S. stock markets, good for credits, keeping credit spreads lower. All things being equal. Where you have trade that is unfair, it should be addressed. But I think it should be addressed in by having people come to the table and be specific about where the trade is imbalanced, where policies are unfair, and address those specifically if they're not righted. So I don't know if that answers the question, but it's a big topic. I mean, that's a lot of scope to that question.
Agreed. As always, Michael Litt, thank you so much for coming on to Quasar Markets Live. I mean, your knowledge is prescient of what we see in the future, and you've called it. I mean, you said here we go with little
I know
caps and
yeah,
mid caps.
we're right. We've just started this shift from the mega to the small mids.
Yeah,
And there's stock picking in there. There is stock picking in there for real outperformance. Now, that's the theme that I'll leave everyone with. It's the same thing we thought was going to happen on our last call in September, and now it's in full swing, and it's going to keep going into March. I would say
agreed.
until March. Now, what happens with all these policy initiatives and markets going up and down? What I know you cannot predict with respect to Trump's management style, you can't predict it,
Hmm.
right? So you have to be ready for a lot of change. Every morning you're going to get some new piece of information that could be important, or it may just be a red herring.
And we'll leave it at Trump's toilet tweets. So thanks, Michael Litt, for as always, and we'll see you next time.
Great, thanks.